have a whole host of earnings. Now, SBI, the largest PSU bank, is said to be reporting its numbers. What is one expecting this time from the bank? Let's go across to Snehi, who's standing by for that.
Well, yes, all eyes are going to be on the biggest PSU, SBI, coming out with its Q1 numbers. Let's take a look at what the street is factoring in when it comes to this PSU bank's numbers. On the standalone basis, let's first talk about debt interest income. That's expected to come in at 42,292 crore rupees, which is a 9% uptick coming in on a year-on-year basis. PPOP, which is the operating profit, is also seen at 25,698 crore rupees, which is an uptick of 2% year-on-year, but a drop of 11% sequentially. Now, when you talk about provisions, that are being seen at 3,197 crore rupees, coming around this time 28% higher year on year, but almost double on a quarter-on-quarter basis. So watch out for what this number looks like. And net profit also expected at 16,786 crore, which is a drop of 1% on a year-on-year basis, a 19% cut coming in sequentially as well. Now, when we talk about NIMs are likely to moderate 3 to 4 bips sequentially to 3.27%, somewhere around that number, due to tight liquidity. Employee cost is likely to normalize this quarter as well, but other income and fee income is likely to remain weak. Thereby, PPOP is expected to grow 2% year on year. Now, Q1 is seasonally weak for agri loans, thereby slippages are likely to increase to roughly 8,500 crores coming in. As a result, you can expect some impact to show on the PAT as well, which is most likely to remain flat year on year. That 1% cut coming in is what the street is penciling in on a year-on-year basis. Now, when you take a look at advances and deposits, advances growth is likely to remain strong at 16%. Loan growth is likely to outpace peers as well. Now, SBI loan growth has been strong at 4 to 5% sequentially over the last 2 quarters. So we'll watch out for if this momentum continues. Deposit growth is likely to remain at that 10% year-on-year mark as well. Talking about asset quality, NPAs are likely to remain stable this quarter. Credit cost is also roughly expected to be somewhere around that 35 basis point marks. Now, what are the important things to watch out for? Is going to be commentary on deposit growth, agri book and its impact on the asset quality will also be important to watch out for. Implications of the RBI's new draft circular on LCR ratio. This is going to be one very important cue to watch out for, and what the management has to say about this in its commentary, and any view on direction and trajectory of NIMs will also be key to watch out for. So, well, yes, this is what the street is factoring in for SBI.